The Kavanaugh hearings could set this country back 100 years, and Italy is trying to borrow their way out of debt. What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horowitz with you, and well, lots of things going on, but first things are going on is what a wild time in baseball is you've got two teams tied for first in the West and two teams tied for first in the Central. The Cubs and the Brewers, and the Dodgers and the Rockies. Could be an interesting day. We could have a game 163, but in the meantime, we had an interesting week last week, and I think that one of the top stories or one of the top concerns should be Italy and their attempt to once again borrow their way out of debt. As they put it, they are trying to eliminate poverty by creating more debt. Again, this is the same old story that we continue to see, and it's happening everywhere. This is not just Italy. This happens to be on Friday morning. What caused a little bit of a sell-off was their decision to go to about 300% of debt to GDP. And of course, we have learned that you can't borrow your way out of debt. But this is the problem with the central banking system around the globe, is that they feel that they can print more money and print more money at the same time devaluing and really hurting the middle class and our buying power. So this is what we have to look forward to. And if you think it's just Italy, as I've said, and I said this on Yahoo on Friday, okay, I don't think our banks are any different. And I don't think, in my opinion, again, this is an opinion, that the banks, I think they've lent more than they're supposed to, and I do not think that they have enough in reserve to cover the loans based on the laws. And again, this is something, a trap we've fallen into over the years, is that, well, the banks are too big to fail. So the Fed will be there to help them and bail them out. And who's going to bail out the Fed? And it's really, in my opinion, just disgusting at the way that they allow things to happen. And of course, we did have Chair Powell last week discuss and go ahead and hike rates, which again, out of all the Fed chairs I've seen, and I go back to Volcker, I think that at least Chair Powell speaks English and he tells you what's going on. And I don't necessarily agree. I think that there's a lot of things that they're seeming to leave out. And I think the first thing that we're not talking about is they keep talking about the lack of inflation. And I continue to watch my bills grow of things I have to pay. Of course, we know that they don't count food and energy because they're too volatile. Well, energy may be volatile, going up and down, but it is still going up. But food certainly is not volatile because it just goes up. I don't see them dropping the prices down. When I go to McDonald's or when I go to the grocery store and they raise because of some commodity is higher, I don't see them coming back down when that commodity falls. And of course, commodities are a little bit lower as it is to begin with, and we'll get into that in a little bit. But in the meantime, okay, you're going to have a pretty big situation, I think, are coming up, as we now know that there's 6.9 million jobs available, and there's only 6.3 possible workers to fill those jobs. So what does that mean? Well, what it's going to mean is that corporate profits are going to be cut because they're going to have to pay more money. Now, it's very simple. If you go back, to when this whole collapse started, okay, what did we have? We had not enough jobs. So the people that were fortunate enough to keep their jobs were basically told by management, you're going to work harder, you're going to work faster, you're going to work longer hours for less money. And if you don't like it, there's a waiting line outside to fill your job. So they did get more production and they did get more things from their employees to bring in. And so their labor costs were very low. Well, now with competition for jobs, those labor costs are going to raise. So not only are we having raises at the minimum wage, we are now having what will turn out to be true price discovery within the market of jobs. So when we start to see that, you're going to have to start to see higher pay jobs paying higher, which what does that do? That cuts to the bottom line of profit. Secondarily, you take in the higher interest rate that we are having and going to continue to see happen. You're going to have their cost of services in business is going to be higher. Again, once again, cutting into what we call these great profits. So over the last 10 years, the biggest benefactor has been the banks and many of the companies that could take advantage of the borrowing power they were getting to get cheap money to go ahead and continue to facilitate their business. And again, it's very simple. If you know that for every dollar you can bring in, you can generate 10% in revenue and you can get dollars for 3%, well, who wouldn't make that trade? Who wouldn't make that spread? So this is going to be, again, this is going to create some more inflation. Next, we have the overwhelming consumer confidence. Now, who are the buyers in this market right now? The buyers are not the big firms. The buyers are not the big professionals. The buyers are the retail traders that have decided that now the markets are finally safe. The pundits and the advisors and the brokers have finally convinced everybody that this time is different and that this time is safe, and now it's time to get loaded up into the market. Now that we've rallied 300% from the bottoms, now is that time to get in. And of course, that's ludicrous and it's basically ignorant. Again, and I'm not saying that you should not get in the market because, again, what do we know? The markets will go up 8% year over year. But the problem that we're having here is that most of these investors are borrowing money on margin that they don't have and they can't afford to lose. So the minute that there's a little bit of a hiccup in the markets, they're going to be forced to sell. So they're going to lose money, but they could also create that big push down. And of course, if we remember some of the charts we've looked at over the years where we have, the euphoria, okay? So the markets are still euphoric now. I mean, you have people stepping at it. Every dip is bought without fear. And of course, consumer confidence is at the same levels it was in 2000 and basically in 2007 and in 1987. So we all know that at some point here, there's going to be a meltdown. Again, we don't want you to sell everything. We'd rather you be hedged. But again, this is more of a trader's situation and investing where you're going to put your money, which is why whenever you're going to invest, you should use technical analysis and not chase around the market, but actually look for some good support levels, because even when the markets do go down, and I will go back to the example of Amazon. Amazon was $30 in 2008 in November. I actually bought it there. Unfortunately, I sold it at 60 when it got to March, okay? And I have not one share now. But my simple point is that there's always things that will have some opportunity if you're using good due diligence to look over the markets and find things. But even if you're not, as long as you're buying good, solid companies, they're going to go up 8% year over year, just not every year. And I think you have to remember to take apart and put together that the money that you can afford that you're not going to need tomorrow to pay the mortgage, rent, for food. Because if you do that, that's where the problems always come in, what we call the greed factor. And that's what we're seeing is we have the overall greed factor playing out here. And of course, it will go until it doesn't. We're not telling you that it won't go for another year. I can't tell you how long it's going to go. I can tell you by the overall exuberance and that this time is different conversation and that copper and other things don't mean anything, I can tell you that that's going to create the problem. And that's what will create the eventual meltdown. Not to mention that you've now got, again, another security breach in Facebook. Now, again, is it a big deal? It's not a big deal to me because I don't use Facebook. I have an account there, okay? But I stopped using it a long time ago, and I never gave much of my personal information to begin with. But these are issues. You remember, the faster and farther we get deeper into this technology, the more the machines start to take over, the more opportunity there is for a breach, okay? Because again, you know, if you kept a ledger on your clients on paper, okay, and didn't put them in a computer, then only you would have those copies. So the farther we get into technology, the more likelihood there is for a breach. And that's something that is going to happen in many places. It's going to happen in credit card companies. It's going to happen in banks. Again, it's not that they're trying to get your information out. I mean, Facebook is one thing. When you're with Facebook, you are the customer. You are the product, okay? But in the other areas where there's going to be breaches, and remember, as we've said, in every type of place of where there's troubles, okay? When it comes to guns, the crooks are always going to get the guns. When it comes to hacking, the crooks are going to be ahead of the business. And that's always the case because the crooks are out trying to get ahead of the business. That's why these breaches happen, and they will continue to happen. This is not going to go away, and it's only going to get deeper and more problematic as we go on, because the anti-hackers, the guys that are trying to build the software and take care of it, are always going to be behind because they're not looking for all the new loops and holes. So I think that's just a problem that we have to look at. And of course, again, these breaches are going to happen, which is why you should protect your information and make sure what you're willing to give out, because whatever you're willing to put out over the internet has got a great chance of being hacked and gotten into. So you have to be very careful here. And you saw it in the stock on Facebook. It dropped hard and it kind of rallied back already. And the next question I just have for everybody is, why isn't Elon Musk in jail? Okay, what he did was about as brutal as can possibly be. I don't care that he smoked a joint on an interview. I care that he specifically, in my opinion, he specifically manipulated the market under no circumstance. Okay, he had no funding in place. To me, you could say, you know, it's a bunch of BS. But, you know, it's bad enough that they allow the Carl Icahns of the world and others like him to tweet out what they're doing. Okay, but to have a CEO tell that they're taking the company private at $420 a share just to stick it to the short sellers is an absolute joke. I mean, when did we get against short sellers in the market? Okay, they make part of the markets. Short sellers create price discovery. Short sellers do create supply for people that want to buy. So again, why is it that he is not in more trouble? And I know that there was something with the suit. The stock got creamed on Friday. But where is it that we should not have this guy being put away? Okay, he broke the law very much like others have done in the past. And it looks to me that, you know, although he hired some high-priced attorneys, he might get a pass. But I'm saying that there should be no pass here. There is no forgiveness for this. Is it because he's got billions, okay, and he's so innovative that he's going to get a pass here? This is one of the problems with our regulatory bodies, okay? When you've got enough money to fight them, they don't typically go after you, and I think that's a big problem. But we're going to step out here for a break. This is Bubba's Bottom Line with Todd Bubba Horwitz. And of course, we want to remind you to check out our high school investing program. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. And also don't forget to catch the Bubba Show every day from 4 to 5 Eastern at libertytalk.fm. Now let's get back to Bubba's Bottom Line with me, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line, Todd Bubba Horwitz. And as we just recap last week's market action, I think we can sum it up as this. The markets are in a big sweeping consolidation pattern. And I think it's not just the Dow, it's not just the S&P, it's not just the NASDAQ. I think almost all markets are in just this sweeping consolidation. Now, the equities look to that they've possibly made a top. Now, we're not making an official declaration. In fact, I will tell you what I've told you almost every day for the last 6 weeks. We're going to observe. We're going to wait. We don't have to be first in. We don't have to get in today, okay? But I do think that there are a lot of warning signs that the top of the market is in. So to me, I would be looking for opportunities to take a sell and a short, okay? But again, I'm not telling you that it's today. I'm telling you that it's something to start looking for, because I think you're going to start to see, you've seen the VIX and volatility crushed, okay? So that's always a warning sign when we become too complacent. How do we know we become too complacent? We talked about earlier, too much consumer confidence, too many people buying at margin. So all these factors lead that the top is possibly near at some point here. I think the interesting part, and we may have to puke it out on oil flew once again on Friday. One of my guys, Private Richie, said to me that we forgot about the every Friday rally, and it was ugly. And we may have to go ahead and puke it out, and we'll see how it trades. I'm obviously not happy with it, and certainly my equity is not happy with it either. Gold continues to consolidate in a tight range. I think that you have to remember that we've got 1180 support, 1220 resistance, and we haven't really broken 1180. So I wouldn't be worried. I'm not worried in trying to get out of this. I think I'm looking for an opportunity to buy it. I mean, certainly I'm looking to buy gold. I'm looking to buy nugget. I'm looking to get into this because I think we've got some great opportunity here. Silver does look like it did break out last week to the upside. And I don't think gold will be far behind. If you remember, we talked about the gold-silver ratio. So I think, silver looks pretty good here. The treasuries, the bonds, getting clobbered. We got the 10-year up to about 3.1 before coming back a little bit. But again, I think that you're going to see bond futures fall, which is interest rates rising. And I think that's a given, okay? We're now firmly over 3%. If you remember, our black swan, or our event that we're looking for, is 3.5% to 4% on the 10-year, coupled with a much stronger dollar. And the dollar did hold support, as we thought, and it did close over 95. So that looks really solid. Grains, had a moderate week. It was they rallied, then they folded, but they were right, about mid-range. We had another USDA report. Whippy, let's have a party. Again, to me, there is so much bad news priced in to the grains already. I don't see much room on the downside. I'm an owner. I'm looking to own more. I think that we see significantly higher prices from here. I think you kind of see what happens in the meat market. For months, hogs were getting slaughtered like that, getting beaten down the drum, slaughtered. The world was coming to an end. All of a sudden, hogs went from a dead bear market to a bull market when we called the bottom. And again, it wasn't that we called the bottom, but we said that this was a good area. And of course, they have now had about a 20% rally, 25% rally, and looked like they're going higher. Fats and feeder cattle look great. They held. They're just right up against some resistance levels, but really, after the big breakouts, have held well. So again, we're looking to buy dips there. We're looking to buy dips in anywhere in the agricultural space. I think you're looking for good opportunities to be buyers here. The crypto space has held very well. I think it's interesting. You've now got Fidelity getting involved. So you keep, you can listen to the so-called experts continue to bash and tell you what garbage it is and that it's a bubble, it's a scam, it's this. In the meantime, you've now got Fidelity, you've got JP Morgan, you've got Goldman Sachs, you've got IBM involved. So we can talk about all we want of what a scam this is. In the meantime, as I say, I would not take all of my money and put into it. I would not take a big shot, but certainly, as I like to call it, the dinner and a movie trade. Again, if you figure it out, whatever you can afford, that's not going to change. It'd be like if you're going to the track, how much would you be willing to blow at the track? That's the kind of money I'd be investing in here. But I do think it's real. I do think they're going a lot higher. And I think it's all good. And I'm happy that they kind of suppress this. And again, personally, my personal holdings are losing money at the moment, but I'm not worried about it, and I'm not going anywhere. I think it's interesting that Nike had earnings last week and they didn't quite meet, or they met earnings, but they didn't meet expectations going forward. But it looks like the New Jersey Pension Fund is going to drop Nike. I think they've got about $44 million stake there. I have to ask the question, why would you drop it? I understand, trying to be good and not have things like people who are anti-smoking wouldn't know Philip Morris Altria. I get all that, but these companies are so much crossover, and it's hard to find out exactly what they're doing. I mean, again, it's up to them, to me, just because of the Kaepernick ad, I didn't agree with it, but it is, this is one of the problems. We're trying to pick too many sides. I don't like Colin Kaepernick. I don't like what he did, but he has every right to do it. And if I want to invest, is it going to kill me to invest in a company? Again, a lot of the companies you're in, a lot of the mutual funds you're in, you don't know what they're investing in. So again, if we're going to try to nitpick everywhere out, I think, to me, that's just a mistake. And I don't particularly care for Nike even before all this. So it's not that, I'm just saying that it makes me wonder if and this is more also evidence to what I think some of the issues are. You're starting to get decisions on other things, which I can be a problem. And, you know, I think, you know, that when you look at the overall economy, okay, you can see that we have some growth, but our GDP is going to start to slow back down again. And I think we're going to see a dramatic fall. I think that, you know, we've been so hepped up. I think we're in a false sense of security here. I think there's some major issues that are coming on down the pike, and I think that one of the things is the problems that we're seeing with the president and his inability to get things done because of all the roadblocks that he has to face. Now, you would have to admit, no matter which side of the aisle you sit on, you would have to admit that his policies have changed a lot of the economy and made things a lot better. And if we're going to continue, okay, to grow, then we need to get these things through. But I think when you look at it, I think we're really getting closer and closer to a recession. You know, this goes back to what we talk about very often. The yield curve is getting ready to invert still. Okay, short-term rates are going to be higher than long-term rates, which is, we call that backwardation in commodities, inversion in the bond markets. 2-year notes should not be higher interest rates than 10-year, and that's what we're starting to see. LIBOR is continuing to rise. The London interbank lending rate, which is what most mortgages are based off of. So this recession that we continue to say is not coming, I think is getting closer and closer. You know, if you remember that markets don't announce themselves, if you remember that they just show up, okay, I think you will find that will be a problem in the big picture. Okay, I think that's one of the things that we have here. And again, if you look at what we have going on, you know, throughout some of the political aisles, which we will talk about in my commentary, that's creating a much bigger problem as well. So I think as we look ahead to this week, you've got start of the fourth quarter. We've got jobs on Friday. I'm sure they're going to be good. Nothing has been convinced me that they're not going to be good. So I think the jobs will be good. Again, if they're too good, it could create higher rates. So there's a lot of things going on, and we are now in the start of a new quarter. So let's see. You know, October has been a very big positive month, and October has been a very big negative month. If you look back in history, the biggest sells came in October. We're not predicting that, but we're saying to be careful and watch out. We're going to stop by here for a break. We'll be back with my commentary after the break. This is Bubba's Bottom Line. Todd Bubba Horwitz. We'll be right back with more after the break. What's up, everybody? Make sure you take a look at our high school investing program. See if you can help us out at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. And of course, let's get back to Bubba's Bottom Line and my commentary. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, this week, I think, was one of the most excruciating weeks to watch the Hill. The Hill itself, watching things that happen on the Hill is a joke to begin with. We know it's always, you know, partisan. We know that if it's a person on the right who's getting questioned by somebody on the right, they're going to be nice and, you know, kissy kissy. And if it's when the left comes to get him, they're going to attack him. And the same goes the other way. But these Kavanaugh hearings, if he does not get confirmed, if they find no evidence, now they've not, he's had 6 FBI investigations in the past. They've never found anything in the past. So this could set that whole, those hearings, okay? And I found Dr. Ford credible. So again, I'm not saying she's not telling the truth. I just think that I don't think that it was Brett Kavanaugh. That's my opinion. Again, if I'm wrong, I'll be wrong and I'll be happy to say so. But the whole process could set this country back 100 years, okay? You have got, okay, the left, and this is a fact, this is not an opinion, the left is trying to regain everything so they can, A, impeach Donald Trump. Impeach Donald Trump for what, okay? They're trying to hose this Justice Brett Kavanaugh, okay, with a smear campaign. Why was the information not put out in private back when Senator Feinstein got the information, okay? Why did it take to right before the midterms, okay? Again, Dr. Ford, I think, got duped and got dragged through the mud as well because I think this could have been done in private. And if he, listen, again, I'm not defending Brett Kavanaugh because I don't know whether he did it or not. Based on the testimony, Dr. Ford was very ambiguous. Brett Kavanaugh was very exact and did have a calendar to back it up. Now, again, any of that stuff can be changed. Again, this is not my defense of one or the other. This is the overall process is an embarrassment to the United States of America to have these people talk like this and try to go after somebody. And the way that they asked the questions, the way that they demeaned a potential justice, and Kamala Harris and Booker and Lehigh and the Blumenthal, who said he served in the armed forces and never did. Again, the attack here was an embarrassment and showing just how desperate that the left is to get control. And why do they want control so much? Okay, so let's think about this for a minute. Why do they want control so much? Because they want to make this into a socialist country. We're already partially socialist, as we know, by all of our all of our welfare programs. But they want to turn this into almost all socialism. They want to turn it into a gigantic government. Okay, why? So they can end up with the money, and the rest of us can end up with let them eat cake, so to speak. And it's an embarrassment to the whole system to have these people talk down, demean, and put in position of taking an innocent woman like Dr. Ford and putting her through this process when it could have been done privately. The actual act of how they act and what they talked about and how they got Senator Flake, okay, who's a little bit of a flake anyways, how they got him to agree. Now again, it's fine they're going to do an FBI investigation, but this should have all been done immediately, not right before the midterms. Can't we all see that this is a political ploy, that Kavanaugh and Ford are pawns in this ploy? Okay, again, I don't say that he didn't do it. I don't know. I don't say that he did, that she's wrong. I don't know. But what I do know is it could have been handled 6 weeks ago instead of trying to come up and using this as a political ploy, where Chuck Schumer said 23 minutes after Brett Kavanaugh was announced that no matter what, we're fighting it. And they've already got their next website up for their next candidate if Kavanaugh doesn't get to it. So this, to me, is a big, huge problem, and again, an embarrassment. And again, I'm a libertarian. I hate the left and I hate the right, okay? I like some values from both, but what's really a problem is that this is getting to be totally out of control, and the actions of many of the people right now on the left have been embarrassing to this country, and it's got to stop, okay? We cannot bring ourselves down to that level. It's a total embarrassment. This is Todd Bubba Horwitz. Bubba's Bottom Line. And of course, I got to give you my football game for tonight. We like tonight the Pittsburgh Steelers. Again, we're going back with a double for the Steelers. Pittsburgh against Baltimore. Have a great weekend, everybody. Enjoy the end of the baseball season. Enjoy football. We'll see you back here tomorrow with Bubba's Daily Update and next weekend with Bubba's Bottom Line. Thanks, everybody. Have a great weekend. We'll see you later.